In this video, I'm going to teach you how to use this candlestick manipulation pattern in the market. This video consists of these topics. We are going to cover how this candlestick behave in the market, 3 types of candlestick entries, 2 types of invalidation, entry model, and some few examples, and also the combination on where to avoid this kind of structure in the market. So let's begin with this video. Here we have a bullish structure in the market. We can see that we have this first bullish candlestick here, and then the second bullish candlestick. But the behavior of this bullish candlestick, the second candlestick here, we can clearly see that the market traded below this previous low here. On the first candlestick, we tick, and then the second candlestick must trade below this previous candlestick's low. Okay, and then most of the time you will see that price is likely to have in this section here, you might even have a bearish candlestick like this kind of candlestick, guys. You'll see them mostly when the market is trying to reverse most of the time. Like for instance, if let's say this is your order block here, and then the market is doing something like this, most of the time you will see this kind of candlestick pattern here. This is where you'll be looking to go along. This can serve as also a confirmation candlestick, but we will cover that when we move forward with this video. So let's look at the bearish candlestick. But before we move on to the bearish candlestick, what I wanted to cover is how this candlestick behave. Most of the time you will see that price will do something like this. It will make a low, and then it will move to the upside, make a high, and then it will do something like this, make another low. So this candlestick will do something like this in the market. It will do something like this, making this your manipulation, and then this being your change of character here. So even if you don't know how to identify this, if you identify this candlestick pattern over here, it will eventually give you this kind of structure in the market, and then you can clearly find your order blocks here or your demand zone here. So most of the time you will wait for the market to retrace back here and then to go along. But because we are still in the beginning of the video, I'll demonstrate that when we move forward with this video, because this is plain simple. I'll show you even the entry point and how to enter the market in different market behaviors. So if you understand this structure, guys, just remember, if you move, let's say this is your daily time frame, and then you see this structure here, and then when you move forward to the, maybe let's say the 1 hour or the 45 minutes or even the 30 minutes, you will eventually see this kind of structure. If right now, let's do something like this, we have this high, we have this low, we have this high, we have this low. So that means right now the market is moving to the upside, but obviously there will be a bearish trend. And then we have this low breaking this high here, and then we have another high. We break this high, which is this one, and then we have another high here, and then we have a lower low like this, and then we have a lower low. You will see the market behaving like this. This is your structure here, and then you will be looking to go long in the lower time frame, eventually around these areas here. But this structure here, you can eventually miss a lot of trade by using it in the market. You'll see when we move on to some examples, because this candlestick behave in a different way in some different situations. I have backtested it a lot to identify some behaviors of it in the market, so you don't have to worry about it. I'll even show you some few examples so that at least you can understand this candlestick like in depth. So let's move on to a bearish view of this kind of candlestick. In a bearish candlestick, you will see that the first candlestick here, you have a high, and then on the second candlestick, price will trade above this high here and then close bearish. And guys, to find this kind of candlestick pattern, sometimes, because I'm sure I'm going to miss a lot of information because I didn't even script this video, I just made the slides so that I can at least show you how the market behaves. Most of the time, let's say you have a structure like this, and then it breaks down, and then right now the market is trending to the downside. You can eventually find this kind of candlesticks around these areas here. Even if the market is very strong, you will eventually find this kind of structures around these areas here, most of the time in the middle of a trend. And even on reversals here, you can still find this kind of structures. What I mean by structure, I mean this candlestick pattern over here. So sometimes even on this area, it can still behave like this. You can still have another candlestick like this. We can still have another candlestick like this. Let's say price did something like this. We have a higher high, and then we have a higher low. But then this candlestick trades above, it manipulates this high and manipulates this high. So it goes to show that those people who put their stop losses around this area here, they will be stopped out. The people who put their stop loss on this first candlestick and even the second candlestick will be stopped out by this third candlestick. So that means we wait for this candlestick to be available in the market so that we can at least try to trade it, because we can clearly see that this move to the downside is very strong. The candlestick even closed bearish. So that means right now the market is eventually trying to push lower. And the next candlestick here, guys, it can still even be a bullish candlestick. You can still find a bullish candlestick around this area here. And then on the fourth one, that's when the market will shoot to the downside. So you just have to understand it in this way. But let's look at least a practical example so that at least we can understand it. Here, you already know that this is the first candlestick. This is the second candlestick. Let's identify it here. You can clearly see, even if you choose this first one, this as your first candlestick, this as your second candlestick, you can eventually see that, okay, if this candlestick behave like this and it comes to the first candlestick's high, that means we can still build a trading strategy around this two candlestick pattern. And then we wait for the market to come and retest this previous high here. And most of the time, this will be your sniper entries. I have made a lot of trades like this one here. If you visit our Telegram, you will find them a lot. They are there everywhere because I've been trading this kind of structure a lot. But it doesn't mean price will always come and retest here. No, it doesn't mean it that way. Sometimes, let's look at this example here. We have the first candlestick and then we have the second candlestick here. And you can clearly see that this candlestick came to this area, around this area here. So for this example here, on this example and even this one, which one will you trade? Because most of the time, if you are focusing on this one, that means this trades here, you are going to miss them a lot. Okay. And let me try to make it at least a little bit difficult so that you can at least understand it. I'm going to draw extra two candlesticks before here. We have, let me do something like this. We have this, let me do something like this. Let's say right now we have these two candlesticks here. And then we have these two candlesticks here. Let's add them. If you add this candlestick's body and this one's body and the high, you will have a candlestick like this. You will have a candlestick like this. You will have this high and this low, and then the body, and then you will have a bullish candlestick like this. And then if we move on to this side here, on this side, you will see that we have this high and then we have this low here and here. And then if we combine the body, we can see that we have this body on this candlestick and then we have this body on this candlestick. And then we will draw a candlestick like this. And then we have what we call a bearish engulfing candlestick. And most of the time, a bearish engulfing candlestick likes to retrace on the previous candlestick's body and then drop lower. That's how you should understand this structure in a different kind of way. At least you will understand the behavior on where, let's say right now, the retracement won't even come here. Because right now we have a bearish engulfing candlestick. That is why you see the market retracing around this area. Unlike on this one, where we build up a rejection candlestick here. We have this move, but if you combine the two, they build up a rejection. That is why the market is retracing around this area. This one is building an engulfing. That is why the market is rejecting around this area, not on this manipulation level here. Okay, I hope you understand it. Let's move on to three types of entry points. We have three types of entry points, guys. This one is a higher risk. On the first candlestick, on this first candlestick, you will be looking to enter to make your entries on the close of this candlestick. But if you want to at least catch a little bit of more profit, you can still wait for the market to make an entry on entry 2 on the open here. And then lastly, price likes to retest on the low of this first candlestick. This is where you'll be looking to go long. This will look something like this in the market. It will look something like this. Yes, something like this. Let me erase it and show you clearly. It will look something like this, because we have that structure and then the market move to the upside and then the market will come and retest here. Something like a head and shoulder. Yeah, something like that. It will look something like that. So let's move on to a bearish point of view. We still have the same thing. The first entry is on the close, the second on the open, and then lastly on the high, close, open, high. On the other one is different. On a bullish candlestick, obviously is going to be open, low, open, close. Okay, low, open, close. And then on a bearish point of view, it's just vice versa of everything. So right now, let's move on to this invalidation. The invalidation, we don't want to see price trading below. If like you are waiting for the market to come to this area here and then price suddenly drops lower, that means you have to leave this trade setup alone. Okay, even on this side, if you are trying to enter the market but you keep getting stopped out, if price crosses the invalidation level, which is this candlesticks, the second candlesticks high, that means you just invalidate that trade setup and then move on to another pair so that you can find at least another reasonable advantage in the market. So in this way, you will understand how the market behaves and how to tackle it very easily. It's not even that difficult. So another thing that I want to point out on this invalidation is that sometimes we can have a posing candle here. Most of the time you will see that this posing candle like this, it will be bearish without even price touching here. Then eventually this next candlestick, when it opens, it should at least trade below this low here and then retest one of these entry points. Okay, it should do something, at least something like this. It should manipulate again, and then if this candlestick close bullish, just know the market is going to trend very hard. The same thing will apply on this side. You will have a posing candle around this area like this, and then the market will eventually come, break this high, and then touch this area and then drop lower. That's how the market will behave most of the time. So let's look at an example so that we can at least understand this structure. We have this setup here on the 3 hours time frame, and then that means right now this is your invalidation, and invalidation is this high here, and then we have the entry at the second and then the first. So that means right now we are looking for the market to come here and then drop, to come here and then drop. But you can clearly see that the market touched the entry 1 without even touching the entry 2. And here, this is the close-up view. To enter the market in this situation, you can wait for a rejection candlestick, and in this situation you can see that the rejection candlestick is also a bearish engulfing candlestick. What I mean by rejection candlestick is that this candlestick must trade above this previous candlestick's high and then close bearish. I hope you understand it, guys. So right now the market will look something like this, and you can clearly see this retracement is this move here, and you have to wait for the market to come and touch this. And most of the time when price, let's say, let me show you something. This is your line here. Before you can make an entry, make sure that price has traded above the previous high. You have to have at least a high somewhere around here, or a price should make a high and then trade above it, and then this is where you can make your entries and then trade lower. Something like this. If let's say right now the market is around this area and then is touching the first line like this, and then you see a rejection here, it's because price did not trade above any high, and you can choose this high, and then you make a line above the high, and then you wait for the market here. You don't have to rush it. Even if you miss it, it's fine, because sometimes you can get in early and then be stopped out prematurely. And then if I clear this out here, this is the 1 minute time frame. You can clearly see this pattern here. This first one here failed, but then it made the second pattern again. That is why you see this move shooting to the upside. This one failed too. Okay, and as I said before, you will see this kind of candlestick behaving in a middle of a trend. Even on this area here, we can clearly see it in a middle of a trend. You will eventually see this kind of candlestick pattern behave in the market. This one also failed. Obviously, price did not even come to the retracement areas. It just started to shoot to the upside. This rejection will be the point where you see that, okay, price is rejecting, price might eventually knock me out. You have to trade at least the third. You have to get into the market on the third candlestick or the fourth candlestick. In the beginning, you should try this. In the beginning, you should start with trading the third candlestick. What I mean by the third candlestick is that this is the first, this is the second candlestick. You have to get into the market with this candlestick. When this candlestick closes, you should be in the market or you should be stopped out. One of the two must happen. Okay, even on this area, let me clear this out because I can see them happening everywhere. This area here, we can see that we have you see this bullish candlestick, it has a huge huge rejection to the downside. It's telling us a different story. And then on the next candlestick, it shows that they tried to push the market lower, but then they came up. So that means these people who are going long here, they were still available in the market. So that is why you see price trading below this low. This will be your first candlestick, and then this is your second candlestick. This is the third. You should be in the market with this candlestick. You should enter around this area because this will be your entry point, and then ride this move to the upside. So right now let's look at another entry model. We have the invalidation, which is this area. We have entry 1, check, entry 2, check, entry 3, check. So that means right now we're waiting for the market to come here and move to the upside, to come here and move to the upside, or even come to the level 3 and move to the upside. So which one would you choose? Because you can clearly see that the market here entered even the entry 3, and also around this area we can clearly see that price made a bullish engulfing candlestick, which is also a rejection. Bullish engulfing candlestick, which is also a rejection candlestick. That is why you see price trying to move to the upside. But then that is not the area of entry here. This is the area where price is trying to behave. Let me clear and show you something, because let's look. You'll see. You see this high here and this high. This is the high, this is the high. Price did not even come. This is not the move. This move here is this one here, okay? And like as I said before, when you move on to the lower time frame, you will see this. You will see this structure here. You'll see the manipulation and then the break of structure. You can see this is the break of structure here, and then we have the manipulation. So that means right now you're waiting for the market to come at least around this area and move so that you can trade to the upside. Let's look and see. Okay, we can clearly see that, okay, price did not come. Oh, it came on this. Sorry about that. This is the candlestick that triggered the entry. You can see it crosses entry 1, check, entry 2, check. But no, this is the entry, and you can clearly see that when price was shooting to the downside, there was not even a visible bullish candlestick to enter the market. And also, if you look clearly here around this area, we can find the similar pattern like this. You can also use this thing here as a confirmation to enter the market. It's not even that hard to understand this, but the concept is just plain simple. You just have to backtest. You'll see them happening everywhere. I hope you understand it this way. So let's say right now, guys, if you see this structure, most of the time when you move on to the lower time frame, in the beginning you should focus mainly on this. You should find this kind of structure for a bullish trend. You should find this structure here, the one that breaks the high and then breaks the low. Then you'll be looking to enter the market here. This will help you to identify the break of structure very easily. For those who will be waiting for even the FVG around this area, and then they will say this is their liquidity gap whatsoever, then this is the candlestick pattern you should focus on, because it gives you a structure without even moving to the lower time frame. Let's look at this candlestick combination to avoid. Let's start with the first one. You can clearly see on the first one, price touched here and then closed bullish. So if you are that person who enters the trades on the first entry, you might be in profit a little bit. But then if you are someone who enters the trades on the second, it's fine. I mean on the third, this is the third, because this is on the manipulation, this is the second, and then you'll be waiting for the market to come here and shoot to the upside, move to the upside. But you can clearly see that, okay, on this is the third candlestick. So that means you should be in a trade on the third candlestick. But let's see how the market behaved. It shoot to the downside. Eventually, I have been there, guys. Eventually, sometimes I can enter the market here, okay? The market will push to the upside like even on this next candlestick, it will push higher. But when this candlestick drops, I won't be in a loss because of the time frame. The time frame that I'll be entering the market is the time frame that I'll be using to manage the trade. Okay, so my time frame is equals to trade management. So in this situation, you have to be able to manage the trade. And yes, it can do a couple of times, but if I manage this trade properly, obviously I will be in profit, but then I will be in break even on some few trades. I won't even touch on that because that one is very difficult to understand. It's just that a trading trade management is a strategy by its own, if I may say it that way. It's a strategy by its own. And then here, when this drops to the downside, because I know that the market is likely to move to the upside here, I can still enter the market here and still do the same thing here, and then I'll be in a profit again. But obviously this one will be small profit, guys, and then other trades will be on break even. And then because this candlestick here is the one that took me out on break even, and it even traded below the invalidation, so that means I'm no longer looking to enter the market because price traded below the invalidation. And for example purposes, if let's say this candlestick here comes around this area, and then this one here, it comes here, I will still look for long even below the invalidation. You know the reason why? Is because this is the, let's say this is the daily time frame. I will wait for the whole 24 hours for this candlestick to close to show me that price has already invalidated. I hope you understand it. Let me just try to draw a structure, maybe it will be very clear. Let's say for now I have this levels here. We have the first level here. In this situation I will use this second and then the third. But the next candlestick, guys, because we want to enter the market on the third candlestick, the market will open here. Let's say it drops lower very aggressively. No, let's say it drops lower like this. I'll still be looking to enter long even below this area, but don't do that. Don't tell me I told you to do that, but guys, I'll be looking to enter long. Let's say we are on the daily or maybe the 4 hours. I will wait 4 hours for this candlestick to close, because sometimes the market can do something like this. Yes, something like this, guys. And then I'll be looking to enter long here. As long as this candlestick did not close, I'm still waiting for the market to go long. This will be what you call a double rejection, and it works perfectly, guys. It works like a charm. So I'll be waiting for the market to do something like this for double rejection. This one is kind of advanced, guys. I won't even touch on that. It's just that I don't even have time to talk about, because it's a little bit stressful to talk about it, because some of you guys don't even understand what is a rejection candlestick. So maybe in the future, leave a comment below if you want to understand it, or maybe you can just text me on Telegram. Maybe I'll give you a little bit of information about it. It's not even a big deal. You just have to backtest and understand how to trade it properly. Then it's going to be very simple. And then from here, I hope you understand what I mean. Let me just add a little bit of a rule. Third candlestick to close. This is the rule, okay? You have to understand. Third candlestick is the rule. Let's move forward. Here we can clearly see that we have the third candlestick and the fourth, but this fourth candlestick did us dirty here. But we just have to avoid this kind of mistakes, guys. That is why I say use the third candlestick. You can clearly see right now price traded here, okay? But then will the market push higher? Let's look and see if the market did push higher. And yes, it did push higher. So if you entered on this third candlestick here, this one won't even be in a trade. But for those who likes to wait like me, because I'm kind of greedy in a bit, I will even wait for this low to be retested here. I'll still wait for the market to retest this low here. I will wait because the market likes to do some silly things. The reason why I say I will wait is because I have backtested this structure a lot, to a point where I do understand every move it's trying to make, and I know when I'm going to be stopped out looking at price action. Because sometimes, yes, obviously I will try to enter here, and then the market eventually will come down, stop me out, and then move to the upside. But guys, you see this candlestick, a lot of people don't know how to read candlesticks, guys. You see these candlesticks, guys, it doesn't work the way people explain it over the internet. Let me just explain. This is a bullish candlestick. It opens right. Let me clear. I want to explain something. This is a bullish candlestick. You see this candlestick here. It doesn't even price action doesn't look like that in the lower time frame. It doesn't even look. It opens. Okay. Most of people will say this candlestick here. It opens here, and then it shoot lower, and then it move to the upside, and then come down and close. It doesn't even work like that, guys. It doesn't even work like this. No, I disagree. Go and backtest. Let me give you an idea on how to backtest this kind of candlestick. Go to there, find this candlestick, okay, on the 1 hour time frame. Let's say on the 1 hour, move on to the, maybe let's say 1 minute, or maybe find it on the 4 hours and move on to the 5 minutes. Look, always check when did this candlestick open. Check the time when this candlestick opened. Okay, you will see that price is very is very aggressive. You'll see that price did something like this. It shoot to the upside, came down, do something like this, and then close in a span of 4 hours. So that means even if you are in a trade here, you can still profit from this move. So many people will think that, okay, the market should to the downside first. No, it doesn't work like that. This candlestick, guys, you have to study it a lot, then you'll understand it. I'm telling you, guys, let me just show you something. Maybe you'll understand what I mean. Even though this video is not about that, I just wanted to, I'm going to draw 2 candlesticks here. I'm going to draw this one. We have this one here. I'm going to draw a long wick and then a smaller wick. Okay. Right now, I'm going to draw the same candlestick, but right now it's going to be different. You see, we have these 2 candlesticks here. Do you want to tell me that these 2 candlesticks are different? They are not even different, guys. They are not. So right now, let's say if I draw this candlestick here like this, I draw this. No. I draw this candlestick like this. So you want to tell me these 3 candlesticks are different? Guys, if you look at price action with colors, it's going to be a little bit difficult. Guys, you see this candlestick. If like price is on the 4 hours, okay? Around the 4 hours, it opens. You can see they open here. This one opens here. This one opens around this area. This is the 4 hours. Do you know that price can start to make this wick by just open? It can start by making this wick and then drop very aggressively to the downside, and then it comes up again to cross the opening area. That is why you see a bullish move. So many people will explain this like this. Will say, this is the open. Let me show you. Let me do a little bit. This is the open. I'm explaining this one here. The market opens and then it should lower to make the low because they see a bullish candlestick, and then it shoot to the upside to make a high, and then it comes down to make it close. That is why you see a bullish candlestick. But in reality, let me explain this one again. We have the open price. You see this one started by going to the downside first. It comes to the upside to make a high like this, come to the downside to make a low, and then it comes and crosses the open again and then close. You can clearly see there's a little bit of difference here. So it's like this, comparing to they all opened at the same time and then they all close at the same time, but the direction is very different. If you go and backtest, you'll see this. I'm telling you guys, you will see this. Most of the time when you see this candlestick, just go and backtest, guys. It's just that this video is not about that. Let's focus mainly on this video because this video is becoming very long. This one example here, you can clearly see every time when you make your analysis, you spot this candlestick and then you make your entry here, here, and here. This is how you should do it. This is your example and your analysis. Okay, let me show you. I wanted to show you on the Euro JPY daily. This is the daily time frame. We have this one here. You can clearly see that price paused on this 3rd candlestick, but then on the 4th candlestick, price came to this area to shoot to the upside. Even on this one is the same thing. Number 1 and number 2 is the same thing, but this time price touched the low of the 1st candlestick. Even this one has failed. I'll show you the lower time frame. This one traded even below the low of the 1st candlestick, the 4th one. So right now, let me clear everything. Right now, we're going to look at this area here in the lower time frame. Okay, let's look at this area. And again, as I said before, in the lower time frame, you will see a structure like this before price can shoot lower. You will always see a structure like this. Then you enter the market to the upside. Here we can clearly see when price came to retest the low of the previous candlestick, it came, look, and then it made a similar pattern here. That is why you see the market moving to the upside very aggressive. And obviously this is your stop loss. Why should you put your stop loss here if you're not sure if the market is, why do you have to lose more? There's no need. You can enter this trade, this one here, and then you make an entry on the close and then put your stop loss here. I'll just put it here and then hold this trade here. You'll enter again. What if the market, you enter here and then the market decide to drop lower? That means you're going to risk this. So it's better to risk low. And guys, you can clearly see this candlestick is here. Where's the other one? It's here. Let me find another one. I think there are a lot. Let me see. Okay, this one is that one that I was talking about, the triple version. If you look closely around this area, we have the first bearish candlestick, and then we have the second bearish candlestick that traded above like this. We have something like this. Okay, and obviously on the 3rd candlestick here we will be looking to go short, okay? But then price decided to break again. So that is why I said on the third candlestick, you should be looking to go short. Even if it crosses your invalidation, as long as this candlestick did not close. Yeah, I hope you understand me. I know this one I wanted to make a separate video about it, but at least you will see it when you go and backtest. Oh, and another one is this one here. It shoot to the upside, okay? You will see this kind of candlestick patterns a lot, even around this area. Catch this small moves, but it's just that this is the lower time frame. What I mean is that you will be doing this in the higher time frame to move on to the lower time frame to make a better analysis, okay? So let's move on to let me check this one. Okay, we have right now we're going to check this one. Why did price fail around this area? We are going to check on number 3. Let's look. We have, like as I said before, you have to find the structure. Let's draw it. You can clearly see price broke the high, broke the low. So that means that right now we're looking to go along here. And you can clearly see that we have a rejection here. So that means unluckily we got stopped out. So that means you'll be stopped out here. If you don't use a stop loss, look at this candlestick. Look at this candlestick. Look at them. They are very impulsive. Imagine being around this area. And I know I know most of you guys that likes to do this kind of silly moves. But it's not my account. You will hold a trade like this, being in a loss, and then the market will correct without even trying to get inside here for you to close, because they are greedy. They will think that the market is coming back up, no, and then the market do again, and then they will be in a huge loss because of not using a stop loss. They hold the losses more than the wins. I don't know why you do that, bro. Don't do it. So again, you can it's just that this thing of people trying to hold, you can't hold a trade in a correction like this. Imagine, let's say you entered long here, you don't have an stop loss. Again, you can hold this, move to the downside, but when price is moving to the upside, you just hold just for price to reach here. Why? Don't do that. Don't. It's just that it's not my account, guys. I'm not a financial advisor. I'm not going to tell you what to do with your own money. Anyways, it's just my personal advice. I don't do that, guys. Okay. Right now, because we are done with this example, we can clearly see that this one resulted in a loss. Before we move on to the fourth example, I wanted to show you some few candlesticks that you will see in the market. And as I said in the beginning of the video, that you will see this kind of price action behaving mostly when price is trending. We can clearly see it here. Market dropping lower. Where's the other one? Okay, I see it here. Market moving to the upside. Where can I find another one? Where is it? Here. Can I find the last one or something? Oh, okay. Here. Market moved to the upside. This one failed. Here it failed. You can clearly see on the next candlestick, price just dropped lower on the third candlestick. And obviously, if this was in the higher time frame and then I see this kind of move, obviously on the fourth candlestick, I won't even try to touch that pair. I'll just leave it. Call it a quit. Okay. Oh, and then another one is here. I wanted to find here. This is a bearish one. Okay. You see, but on the third candlestick, it traded above, but then the market shoot lower and lower and then to break this. So obviously, if I was in a trade here, obviously I'll be out because I will be using, let's say, maybe the 4 hours or maybe the daily or maybe the weekly time frame. This is my main time frames. Okay. So obviously I'll be maybe in more than 300 pips or so. As you already know, most of the time I show you almost more than 200 pips most of the time. Even 1000, you have seen them in the group. So this is how you should trade this. But I know someone who is going to understand this video a lot. I wanted to show you another example that behaved similar, but I guess we don't have it right here. Yeah, I don't see it right now, guys. So let's move on to this example here. We have this fourth example here. This is the last example of this video. Let's look into it. You have to find the structure. You can clearly see that we have the structure over here. So that means right now we are waiting for price to come and touch the blue area and then look to go long. What I mean by blue area is that I won't even try to make an entry. I don't like to take an entry here. Okay. I like to take an entry around the open and then the low of the first candlestick. If it was a bearish like this, we have a bearish. I like to enter the trade on the high or maybe on the open here. This one here I just avoided. This one I just avoided. I only focus on the open and low and then there a high and open. So we can clearly see that, okay, let's look at price action over here. You can clearly see that the market came down aggressively, made a bullish engulfing candlestick, and also it traded above. This is called a engulfing rejection. You can call it whatever you want, engulfing rejection, because naming candlesticks, everything will just be there, guys. And obviously the market shoot to the upside, but right now if we look closely, we found the same pattern here. The market pushed higher, found the same pattern here, market pushed higher, found the same pattern here. What I mean is that even if like you are in there, if you are scalping, this is the 1 hour time frame, you found the same pattern here, drop lower. This one failed, bomb, and then don't have anything here, don't have anything. This one moved a little bit higher, broke the high. Obviously you know what to do. And then let me see, you don't have anything, this one failed to go down, this one is perfect, and then you shoot to the upside, and then we have another one here, market shoot lower. I guess right now you can see what's happening with this candlestick, but I'm not here to tell you what to do. So I guess this is the end of the video. Yeah, I guess this is the end of this video. Was very long. I'm done. I'll see you on the next video, guys. Please consider subscribing to the channel if you are new. If you are new, come to the Telegram and also the Discord channel. It's free to see the analysis. You don't even have to pay anything. You can support the channel by, if you want this PDF, you can go to the link in the description below. You'll find the PDF from videos. Okay, see you on the next video. I don't know when, because I'm not consistent. I don't know what's happening with me. I'll see you on the next one. I'm done with this video, guys. Yeah.